Good morning. You've tuned into ET Now, and this is the final edition of Buy Now, Sell Now for the year 2020. I'm Karunya Rao. With me is Varun Hiramatta. Welcome aboard, and let's start off the show by taking a look at the markets. We did finally scale past that 14,000 number. 14,010 was the day's high, but yes, we have cooled off a fair bit from that level. Right now, the benchmarks are trading as flat can be. SENSEX at 47,745 points. Nifty is at 13,980 levels. As far as the sectoral performers are concerned, you have a few names from Pharma, Realty, Auto and financial services that are standing out in the green. But on the flip side, what's capping the upside is the Nifty Metals down about 0.5%. Nifty IT down 0.4%. FMCG, PSU banks are also witnessing a tad bit of pressure right now. HDFC Limited, top gainer. Like I said, financial services is where the positive action is. HDFC Limited, top gainer on the benchmark, up a solid 1.6%. You have ICICI Bank, DRL as well, gaining in the excess of about 1%. But on the flip side, there's Shree Cement, Grasim, Ultratech Cement, UPL, Hindalco and even a Yale, which seems to be sulking in trade. If you look at the broader end of the markets, definitely the small cap index is the outperformer of the day. It's firmly in the green, up about 0.3%. Mid cap index, just like the benchmarks, is trading completely flat. From the small cap index, you have the likes of Aloris Labs, KEC International, Dixon Technologies, PVR, Wokhart Pharma. These are the names which are lending a fair amount of pressure. There's also the likes of Advanced Enzymes, which is up a solid 4.5%. V-Mart is up more than 3%. There's Star Cement, Jamna Auto, Indoco, APL Apollo, Ashoka Buildcon. These are the names that are essentially the ones which are picking up the small cap index. But back to you with that, Varun. Why don't you tell us what's on the stock cloud today?
Yeah, Karanya, sure. So stock cloud today has 8 stocks. Let's begin with Adani Green. They've commissioned a 100 megawatt solar power plant at Gujarat. So that's got that counter in focus. We then have Kalpatru Power, which has secured new orders worth 900 crore. We then have a V-Mart, which has opened 4 new stores, 3 in UP and 1 in Jharkhand. Then we have 2 stocks clubbed together, Phoenix Mills and Godrej Properties, as Mumbai property sales in December are the highest that we've seen in 5 years. So those 2 counters in focus there. Star Cement, one of the cement majors that was missing from the mass rally yesterday. Axis Securities initiates coverage with a buy target of 115 rupees per share and the capacity expansion to drive volume and revenue growth in their view. We then have GMC Projects, which has bagged new orders worth 700 crore for southern India. We then have an IDBI Bank finally with the stock rallying. Management was talking to ET Now this morning, and it appears that the worst is behind us as far as asset quality goes, and credit growth should improve from here on out. So that was the cloud for this morning.
Kunal and Saurabh Jain both are on board. Let's take it across to them. Morning, gentlemen. Kunal, we finally scaled past that 14,000 number. We're ending 2020 in style, apparently. So tell us what could be in store over the next couple of weeks. Which way do you think the markets are headed as we also kickstart the fresh series?
So good morning, Karnya. I think it's a fabulous feeling to have Nifty touch that 14,000 mark. Breaking past about the coveted level as such. But this was something which was something which I had anticipated, because last week there was a huge built up on the 14,000 December ending, the month ending call options, and that generally is the first precursor, the first signal that the market participants are gearing towards a breakout of 14,000. So I for one believe that probably the breakout could happen maybe a couple of days back, but I think it's never too late to see the index scaling past about the 14,000 level. Now, if you look at the options built up still on the December series, there has been a higher call writing which has happened on the 14,100 and 200 strikes. So I for one believe that it's possible that maybe in the last half an hour, last 1 hour, you could probably see some rapid move on the index on the upside, and possibility of even a close closer to 14,100 or just about those levels could not be ruled out. So I for one believe that bullish tones should probably persist for today as well, at least for an intraday trader and someone who's trading for the FNO expiry. Now, on that backdrop, I'll continue to have a bullish stance on individual names, but two different kind of stocks which I've picked up for the show today. First one is APL Apollo. It's a mid cap name and it's a classic stock. Over the last I think 9 months to 10 months, it's done phenomenally well. Risen by almost 2.5x. From those March lows, and I think even at current levels of 850, 854. The adjusted price on the stock price, I think the stock has done exceptionally well. Even at current levels, it looks strong for a momentum on the upside. So I would suggest a buy on APL Apollo. Has been one of my few favorite mid-cap names as well of late. So buy with a target of 900, stop loss at 825. The second would be a buy on MRF. The stock forming a classic bullish flag pattern on the daily charts. The stock is very close towards a breakout of this bullish flag pattern. If you look at the last few days, we've seen tire stocks doing pretty well. Balkrishna Industries had a fabulous day yesterday, so I'm expecting MRF also to try and pick up pace from current levels. Targets of 78,500, stop loss 76,500.
Okay, great. Thanks for that, Kunal. Saurabh, hi, good morning. What are your ideas, and do you have any top 2021 picks for our viewers today?
The top two ideas, low risk ideas would be, first would be KNR Construction. We are having a target of about 420 on this. The company is having approximately more than 8,000 order book in its hand, comprising of road projects and irrigation projects. The execution part has been really well. If you look at the recent quarterly numbers, the company has posted good set of numbers, growing approximately doubling its profits. Reliance on the financing is also quite low, and execution part is phenomenally well. And considering the activity which is coming back to the normalcy level, close to 80-90%, we are hopeful that the company will do well in the next few years. So we are having a target of about 420. Chola Finance is the another stock which I would like to recommend. The target would be 465. It is a diversified NBFC catering to SME home loan portfolio, loan against property. If you look at the quarterly numbers, the sequential numbers have seen a good amount of growth, and considering the kind of improvement in the economy, we are expecting that the company will do exceptionally well. Even on the capital adequacy ratio side, the NBFC is maintaining approximately 19% CAR above the 15% required level, and having good cash on the balance sheet. So we are hopeful that this company will do well, and we are having a target of about 465. The next two wealth creation idea would be again from the construction side, we like Prestige Estates. The target we are having approximately is 320. If you look at the company, it is primarily into the Bangalore market, which is doing exceptionally well. The COVID era has proven to be a very good for the real estate player. There is a good amount of demand which is coming into the mid-level segment, and considering the way interest rates have dropped to close to 7.5%, these companies are doing quite well. Even if they are seeing good amount of traction in terms of booking sequentially and month on month. The balance sheet, the debt on the balance sheet is more than 8,000 crore, but they have done a deal with the Blackstone, selling their commercial assets from which they would garner approximately 9,000 crore. So the debt would not be a problem, and the company is quite bullish on the real estate sector, commercial estates, and would continue to monetize its commercial assets in the times to come. So we are bullish on this stock also. The next stock is Finolex Cables. The company is primarily into the cable segment, and now has ventured into the home improvement segment, like switch gears and all. The traction is good considering the demand which is coming from the real estate sector, construction activity, and all those things. So if you look at the numbers, they have posted good amount of good growth sequentially, and the management is saying that they are quite confident that the way they are seeing improvement, they would be able to cover the revenue losses of approximately 11% in the first half, going in the second half. So we are bullish on the Finolex Cables too.
Okay, thanks for that, Saurabh. Request both our guests to stay on with us. We're going to take a quick commercial break, and then we'll be back with our viewer queries. Stay tuned. Hi, welcome back to Buy Now, Sell Now here on ET Now. One of my colleagues, Jayesh, has been doing some interesting analysis, and of course, it's also in the backdrop of expiry. But how has the last FNO series of 2020 shaped up? Here's a comprehensive view. Let's go across to him.
It looks like we are going to have a merry FNO expiry on the cards. If you have a look at the market rollover picture, that has been in line for the Nifty. However, it has been slightly lower as far as the Nifty Bank is concerned. Tracking the sectoral index performance, it has been led by the real estate space, which has gained more than 20%, and you also have double-digit return coming in from the PSU Bank IT as well as the metals and media pack. Not too far behind is the small cap index, which has gained about 11% for this series, and the Nifty as well as the Nifty Bank are set to gain for the third straight series in a row. What's not done well has been the auto and the energy pack. Despite being positive, they have underperformed the entire market. Talking about stock gainers, you have a lot of high-flying mid-cap names like Steel Authority of India, DLF as well as Canara Bank. And from the large cap space, you have Vedanta as well as Asian Paints that make it into this list. Not much to talk about as far as losers are concerned, but you have Escorts, which is topping the list at 9% negative return, followed by Ramco Cements at about 5% negative return. But the most important would be to track the FNO Qs or the Qs for Jan itself. So you have the earnings season that will kickstart. The entire world is awaiting or watching out for the vaccine updates. There will be 3 stocks that will get added to the FNO series, namely Aarti Drugs, Dr. Lal PathLabs as well as HDFC AMC, and you have the introduction of the FNO series for the Nifty Financial Services Index, along with the run up to the budget that will be at the top of everyone's mind.
Thanks for that, Jayesh. Kunal and Saurabh both are standing by. Let's kickstart the viewer's query then. First up is a Twitter query. It's come to us from Sham Karani. He wants to ask if he should enter iron exchange at the current levels. Kunal, it has seen a very stellar run-up, especially in the last 7-8 sessions. It has added about 120, 130 odd bucks. Is this a good idea to perhaps dip into it right now, or should he wait for some correction to come back?
It could be a good idea to try and chip into this stock at these levels. I think if I'm not wrong, from 775 the stock has started to pick up pace yet again. Last 3-4 days it's managed to move up higher. There are some short-term breakouts also which are visible for the stock. There are some breakouts around 825, 830 zone for iron exchange, and it's managed to cross beyond that as well. So short-term patterns look attractive. There's been good consistent volumes as well. I would suggest that you can, the viewer can look ahead and buy the stock. If you want, keep a 50-day moving average as a retracement level where you can look to average further. So assuming if the stock comes back to say an 825 or 830 levels, which should probably coincide with the 50 DMA, keep that as a level where you can look to average further, because I believe once the trend picks up for the stock, because now it's a very slow and gradual uptick, but once it picks up, I believe that the stock will gradually move up higher to even 4-digit levels as well. So it's a good stock, decent chart. I would believe buy on dips is a much better approach for iron exchange.
Okay, thanks for that, Kunal. Saurabh, how about you? What's your view on an ion exchange?
The engineering segment has done pretty well, and the chemical segment is largely immune. The order inflow has been slow, but it is expected that the order inflow would get faster in the second half. The company has posted good numbers. I think he can hold on to the investment.
So it's hold on from Saurabh. Let's move forward. Our next query, Amit Jaipuria of Delhi. Should I buy IT stocks after the recent run-up? Please share a few mid-cap IT names as well. So, Kunal, coming to you first. I mean, that index is pretty much at lifetime high, and even some of these smaller mid-cap IT firms like Intellect Design, for that matter, LTTS, L&T Infotech, they're all been on quite an uptrend. So, if you had to find somewhere where you see relatively safer entry point in the mid-cap names, where would you look?
So I think the question is safer than I'd probably look at large cap names. I think I'll be happy with the probable expectations which even the large caps offer at these levels. So I think the question is that if you're looking at IT stocks, and why start off with mid cap names and why not start off with the large cap names? That should be a bigger question for the viewer, because I for one believe that the large caps are still offering quite strong prospects on the long term charts. We've been discussing extensively the charts for Wipro, Infosys as well. So I think both these stocks particularly, they look fairly attractive, and there's also a higher degree of safety and cushion into these names. There is much lower degree of volatility when you talk of IT stocks, and especially the large cap names, as compared to the mid cap names. So that's this big overhang which could be there for the mid cap IT stocks. But particularly if you're focused on the mid cap IT, then I would recommend look at Coforge or the erstwhile NIT Tech. I think that stock looks fairly attractive even at current levels. I think the durability of the trend is very strong. You've seen persistent upside, even though the stock has gone through those periodic corrections and very sharp zones of corrections. But every time the correction ends, we've seen a ferocious bounce, almost like a V-shaped recovery bounce into Coforge. So I think that's one stock which you could look at. Maybe an NIT Limited as well from the mid-cap IT. I think the stock has just recently broken past about the 200 level, I think if I'm not wrong. And I think on the charts as well, it looks fairly attractive, especially on the longer degree time frame. So I think these will be the couple of names which I'll be advising on the mid-cap IT pack. But again, just to re-emphasize, the core focus has to be first given to the large-cap IT space. And if there is remaining capital, then look at mid-cap IT stocks.
Okay, Saurabh, how about you? Do you also are you also leaning towards the large cap IT names like Kunal is, or are there any mid cap stocks as well where you find value right now? I think Saurabh has snapped his line, so we'll have to repatch. In the meantime, let's move on to the next viewer query then. This is from Raghav Dhingra of Chandigarh. He's bought 100 shares of BEML at 595 levels, and he wants to know whether he should book profits and exit. Definitely, his investment has nearly doubled from the levels he entered into, Kunal. At this juncture, good idea to book profits?
I would be of the advice that you should hold on to your investments over here. Yes, there's been a late surge in BEML as compared to many of these other PSU stocks, and I think there's been a lot of news flow also and buzz going around BEML. But then categorically, if I try and look at the charts plain vanilla, the volumes which the stock has seen this month has been phenomenal volumes. I think if I'm not wrong, it's almost a 2-year high volumes for a stock like BEML. And the stock has not even broken past about the major resistances of 1100 mark. Generally, when you see such huge volume push, towards the stock price, there's always a tendency that new, set of buyers, whether it's the individuals or whether it's the institutions, they get into these kind of names at the first level of upside, and that generally triggers a long-term uptrend. So I think if that's the case, you've bought at I would say a very good level of 590, 595. So I think in that regards, you have a lot of cushion. So I would advise that the viewer can hold on to his investments on BEML, and I think if your time horizon is say another 1.5 odd year, then you can expect even a 1300 to 1400 kind of a target range for the stock price.
Okay, so according to Kunal, if you broaden your time horizon, there could be some serious money left on the table in a BEML. But I believe Saurabh's back with us. What's your take on a BEML at current levels? Just so you know, Raghav actually bought at 595 rupees per share, and he'd like to know if he should continue to hold.
My take would be it is better to take money from the table. I think I would recommend to book profits. The company is largely into the mining, construction, defense, and railway projects, metro projects. The order has been good, but I'm not happy with the way the company is doing execution and on the margin fronts. If you look at the valuation side also, it is on the higher side. The government of India holds more than 50% stake in the company, and the company is also a disinvestment target. So I think any dilution may prove to be fatal. I mean, when the when the float will increase, I think there is always a chance of price correction. So I would recommend to book profits.
Okay, so slightly opposing views from both our experts, but I mean, nothing to panic about. You can exit if you'd like, or you can hold for a longer term period. Let's switch gears. The next query is revolving around banking, and that to a PSU bank. Monali Day of Mumbai has written to us. She bought Karnataka Bank shares 3 years ago at 137 rupees per share. Should she average now or book losses? So Kunal, coming to you, I know we've spoken about this before, but is there really a case to buy these beaten down PSU banks, you know, a South Indian bank, a Karnataka bank? They all seem to be raising money right now, but do they really stand a chance against these privates which seem to be consolidating and actually trading at, you know, new highs quite often now?
So the fair question, Varun, and I believe that, the stock price, or trend in last 6-7 months has probably given the answer itself. So the reason why HDFC Bank, Kotak Bank, and probably even an ICICI Bank are trading at their life highs or just very close towards it is because the markets are giving them more premium, and which is why there's more money which is chasing these kind of stocks as compared to the other ones. So forget about the small cap or the smaller rung PSU names, but you even look at the tier to large cap names. Something like maybe IndusInd Bank, the stock is still half from where it was a couple of years back. So there are many stocks like this which have still not recovered more than 50% or 60% of their losses. And I think that's the bigger concern for the banking index. Talking about Karnataka Bank specifically, I would be of the view that if you've bought at higher levels, there is no I wouldn't be of the belief that you could probably make some serious money over here. In fact, if the banking sector overall moves up, yes, possible that Karnataka Bank will also move up higher. But then with the amount of alpha and the amount of higher returns which you can generate on a stock like maybe an HDFC Bank or Kotak or ICICI and such other names could be far more higher. You can probably add even an SBI at current levels of 275, 280 zone. I think that's a good prospect at current levels. So I would suggest a shift from Karnataka Bank to any of these large cap names. You can even look at SBI. The stock has not broken its life highs, but I think it looks very interesting. And being one of the leaders on the PSU banking pack as well, I think that's the other advantage for SBI.
Okay. What about you, Saurabh? Karnataka Bank, should one look to shift like how Kunal recommended?
Ratios have been improving in the past few quarters. The bank has also shown some improvement, but it is not the best of the bank in the lot. In the PSU bank space, I would go with the SBI or maybe Bank Baroda. These banks have done exceptionally well in terms of improving their balance sheet, the provision coverage ratio, and the way the growth is coming for these PSU banks. In fact, in the case of Bank of Baroda, they are now digitization is the exercise which this bank is doing, which will lead to approximately 25% of cost cutting in the next 2-3 years. So the amount of profit, the amount of cost cutting would help these banks, and the penetration would increase. So I would recommend to shift from if he wants to convert investment from the Karnataka Bank, I would recommend Bank Baroda and SBI.
Okay. All right, that's the verdict on Karnataka Bank. Then moving on to query number 5, Deepak Diwan writes to us from Bengaluru. He is looking for a good realty stock to invest in, which perhaps has a strong balance sheet as well. So not just from a technical standpoint, but also from the fundamental standpoint, he wants a good bet. Soba is a stock that he is considering at this juncture, asking whether it's a good investment at this point in time. Kunal, let's talk the technicals first and then move on to the fundamentals. But technically, given the run-up in the realty stocks as well in the last 7-8 days, Soba has also seen about an 80-90 rupees addition, 80-90 rupees uptick. What will be your advice to somebody who is looking at a Soba to invest at the current levels? And are there any other realty stocks perhaps that you could advise on?
Frankly, that the viewer is looking to buy real estate stocks, and I think the specific part about the query is that he's looking out for good quality companies So I think Saurav can help you on the fundamentals over there. But on the technicals, of course, Godrej Properties and Oberoi Realties are the ones which have done exceptionally well. And it's difficult to try and recommend stocks because when these stocks they chase up to such kind of a high 30-40% in a matter of just few months, break past about their all-time highs, it becomes difficult to catch these names. But then I think yes, names like Shobha, maybe a Kolte Patil, and even I would say a DLF as a third option could be an option purely on the basis of technicals. We've seen very good built up on volumes on these three names. There has been a consistent price uptick. I think that's the best part about the moves for these real estate stocks. It's not just one or two stocks from a pack of 6-7 which have moved up higher. Whenever there has been a consensus move, a move which lasts for at least a couple of weeks, we've seen almost all of the stocks they have tend to participate in the same kind of cut. So I think Soba could be a good bet. You may probably even look at Kolte Patil, and I think if you're looking out for some high risk, or some high risk appetite stock as well from the real estate pack, look at even DLF.
Okay, thanks for that, Kunal. So the whole sector essentially looking quite upbeat depending on your risk appetite according to Kunal, and Soba is one of the better developers. But Saurabh, one interesting thing you find in Soba shareholding is also Godrej Properties or Godrej families hiking their stake in that company, and that's a huge vote of confidence for a realtor who's this small in comparison. What's your reading on a Soba? Trustable developer? Or would you be a little more cautious and perhaps stick with a larger, more prominent name?
Quite good in the case of Shobha. They have been, doing projects quite in a phased manner. They have been conservative of late, and they have cash on the balance sheet as well. The amount of traction they are getting in the mid cap and in the mid and small housing segment is quite well in the Bangalore market. In fact, they are seeing good amount of traction, good amount of buying coming from the people who are largely employed in the IT sector, because the work from home culture is benefiting a lot. In fact, the government policies together with the RBI policies are working very well for the real estate players. I am quite bullish on the real estate sector for the next few years, and I think the rally has just started. I mean, at the peak of the real estate run, in fact, DLF was market capitalization of DLF was 2.5 lakh crore alone, and today all these real estate players are close to 1 or 1.5 lakh crore available. I think the sectoral shift has coming back to the real estate sector. It is it has started doing well from the multi-year lows that the sector has witnessed. Apart from Shobha, the sectors I have spoken about the Prestige Estate just now, and the other stock which I like is DLF.
Okay, great. Thanks for that. On that note, we are done with our queries. So a big thank you to both our experts for joining in this morning. And on that note, I believe it's also time for a quick break here on Buy Now, Sell Now. Stay tuned.
Welcome back. You're still watching Buy Now, Sell Now. Let's move right on to an ET Now exclusive. What we're picking up from reliable sources is that the Petroleum Ministry may advance ethanol blending targets. Karishma joins us right now with all the details. Karishma, take it away.
Well, right. What I'm picking up from my sources, and this is coming in after a full cabinet development that's happened on ethanol yesterday. Now we're learning that the government is in serious mode to advance the ethanol blending target. For now, 10% remains at 2022 and 20% for 2023, and now to 2030. Now the government has decided to advance it to 2025 rather than 2030, which is the 20% blending target. The government is doing this in order to achieve its blending target sooner, and also in order to cut down crude oil imports, which the Modi government has been, of course, focusing in order to cut down all kinds of imports. The government currently has been studying the demand issues. I'm picking up from my sources that Petroleum Ministry officials are soon going to meet Cabinet Secretary, likely in the first week of January to submit and discuss this draft proposal. Just yesterday, Cabinet also approved extension of subsidy to grain-based distilleries for ethanol procurement. Well, this is going to be interesting for both sugar companies, for also the grain-based distilleries who will have to hurry up in achieving the blending target. This may also get in some extra funds that government could lend out.
Okay, that's a very important update, Karishma. Thank you so much for bringing that to our viewers. And of course, keep your eyes out on all the related companies to the ethanol sector. But let's switch gears a little bit as part of our What's the Story segment, where we've been bringing you insights from the various multi-bagger stocks of 2020. Today, I'm going to tell you guys a little bit about CG Power. And basically, this was a very troubled company. We all know the promoter had some corporate governance issues. The stock actually became a penny stock. And then the fortune essentially changed when the Murugappa group came in and bought out the controlling stake in this company at around 8.5 rupees per share. They spent 700 crores and they acquired the controlling stake in this company. What's happened since then is there's been 1 quarter of regular performance, but the stock has gone up more than 5 times to 45 rupees per share. That's after cooling off from around a high it made of 52 rupees per share. So basically, this management is very competent and capable. They run some great companies here in India: Chola Finance, Coromandel International, EID Parry, Tube Investments. And Tube Investments is the vehicle they used to acquire CG Power. So based on the one call that Mr. Subeya Velian has done on CG Power, it seems that Tube is very excited about the business. They believe that it's a very good opportunity, it's in a great segment, and that the company actually has reasonable market share in a lot of the products that they currently cater to. So it's a turnaround story with a competent management now entering, and the best part is that the debt, which was 2,000 crore, lenders have taken a 50% haircut, and today you only have to service half the debt of 1,100 crore. So no targets by any brokerages on this one just yet, because it's such a new story. But in a couple quarters' time, as the turnaround continues to play out, we might just see upgrades coming in across the board for this one. So keep your eye on it. It might be exciting for FY21 as well. On that note, I also think it's time for a quick break here. We'll be back shortly. Stay tuned.